All right. And here I have John today, also known as the crypto homie. Welcome, John. Glad to have you.
Hey, how's it going, brother? Good to see you.
It's going real well. And, so I have my background here is a beach. And the reason why I have the beach is because I knew I was talking to you today. And the beach for a lot of people represents freedom.
hmm
And I know you've spoken about this, but crypto represents freedom to a lot of people. And so,
hmm
maybe start with telling me how you got involved with crypto and how it's created some freedom in your life.
Yeah, absolutely. So I first got involved in Bitcoin back in 2017, or the previous bull market.
Okay.
And I had a buddy of mine who he first just started, said, "Hey, check this out, man. It's called Bitcoin. You can invest it, and then you can send back and forth to each other." So we would actually, swap, dinner money or beer money over it just kind of casually.
Yeah.
And so that was kind of the origins of how I first learned about it. He kind of showed me how it all worked. And from there, I just really got interested in the technology of it. And I really kind of dove down the rabbit hole of how Bitcoin and other cryptocurrencies and just blockchain in general is really going to revolutionize so many facets of our life and of society in general, and how much it's going to benefit society. And it really spoke to me, and having freedom of money and freedom of currency outside of government control and outside of the
Yeah.
fiat banking system was a really cool concept to me. So this was years ago. I really just spent all the time I could afford to just watching as many videos and as many um, uh, educational content as I
Yeah.
could find. Andreas Antonopoulos was sort of the first guy that
Yeah.
I really gravitated towards, because he just really puts it into perspective of how grand of a transition this all is,
Yeah.
and how important it is to countries all over the world other than the US. We're still here in the US. We don't really need cryptocurrencies. We're getting to that point with all the
Yeah.
hyperinflation that's starting to roll in. But back then it was still, a lot of these third world countries don't even have access to banking. They, something like, I think with the news of El Salvador taking it
Yeah.
as a currency, they're saying something like 70% of their citizens don't even have a bank account.
Yeah. Which is
So it's
not
insane.
good.
No, it's terrible. And that's really where cryptocurrencies, I think, are going to make the greatest difference in the world, is people who really need that stuff. So, yeah, so I saw it as an opportunity to obviously make money and as an
Yeah.
investment. But the change that it's already brought and that it will continue to bring is really has excited me and kept me in the space this long.
Awesome. And now, so taking me back, so in 2017, you obviously weren't doing crypto stuff full time. Like, if I'm not mistaken, right now you're full time in crypto,
Yeah.
right? Living off of different crypto investments and
Mhm.
then also helping people with it. But in 2017, what were you doing, and then how did you make that transition? Because I think for a
Sure.
lot of people, myself included, like that's a it's great to hear about that, to see that it
Mhm.
is actually possible.
Yeah, absolutely. Yeah. So I was right out of high school. I joined the trades and I became an electrician.
Okay.
So I was making decent money all through kind of my early 20s, and had a decent amount of savings. And that played a big role. And I didn't have a lot of debt. So that played a big role into kind of when I first started getting into the space. I was able to, without leverage, able to really take sizable chunks of investments into the space. And yeah, so I was working all the way up until about 6 months ago,
Okay.
when kind of at the beginning of the bull market. So I
Yeah.
spent, after 2017, everyone kind of remembers we went all the way up to 20,000, and then we crashed back
Yeah.
down, and everyone, left the space and thought that, all right, that was it.
Yeah. That's
And
over.
it was over with. Exactly. And so all the crypto bros left, which was a good
Yeah.
thing, because that's really when a lot of the innovation just kept rolling. And for the people who are really interested in the technology, it gave ample time to just start accumulating at really cheap prices, which
Yeah.
I was doing the entire bear market. So for almost 2 years, everyone thought I was crazy. My girlfriend thought I was crazy, but I just I told myself that I believe that this was the future of currency. And the way I would think about it is, I'm not trying to make gains in the sense of making more fiat money. I'm
Yeah.
just trying to accumulate as much of the new money as I can before the rest of the world figures out that it's the new money.
Yeah.
So that was really kind of been my mentality for the last 3-4 years. And you kind of have to keep doubling down, tripling down on your belief in this new system,
Yeah.
which fortunately now we're in a space where it's starting to really come to fruition of, this is where the world is heading, and this is the future of currency.
Yeah.
So yeah, I was able to just ride out the bear market and take all the blows and the hits to the ego of, oh, you're losing all your money.
Yeah.
But in reality, I just saw it as a transition. And yeah, so I was able to get to a point where I was making enough passive income off of cryptocurrencies where I was able to kind of just quit my job and be able to have that safety net of the passive income of crypto, and then really transition into a new space of education.
Yeah.
And taking all the knowledge and the experience that I've accumulated over the last 4 or 5 years and just try to help as many new people into the crypto space as I can. And so, which is really important to me. And it's not necessarily about making money off of that. I charge a little bit, but it's really just, my time is worth it. So
Yeah. Well, and it's worth it to someone to pay you, because like you mentioned technology and, education is so important. And, you mentioned Andreas Antonopoulos, and he's big on the tech, right? And he simplifies things, but, this is a technologically different or more advanced market or thing that for most people, because it's a digital currency or a digital asset. And what is that? It's a new asset class. So education is very important. And so that's cool that you're doing that.
Right. Well, it's a big, it is, like you say, it's a technological shift, and it's a shift for people's mentalities. And I think that for so long we've been in the current system, for some people for their whole lives, they've only ever been able to get paid in the dollar or whatever government fiat money that they have. And so to make that mental jump of, okay, now instead of being able to hold cash or keep, have my brokerage account or my savings account. And we've been so conditioned to allow third-party entities to hold our money. And in the background, without really understanding what's going on, is they're making money off of our money without, I guess we give them consent. And so that's really what I try to change people's mentality is of self-custody, is because now we have the technology, like you're saying, to take custody of our money. And we don't need to allow these third-party entities to keep that custody and keep the power and the control that brings. We can now self-govern ourselves with self-custody of our money. So it's a really big shift. And that's really what I try to spend most of the time with new people, is just sort of helping them make that jump mentally of, you don't need to hold dollars anymore. You can hold something digitally that's scarce, that will hold its value, that it's really the future. So some people get there faster than others, but I kind of just try to feel out, who I'm talking to and give them little tidbits of information as we go. And eventually they all come around. So it's pretty cool.
They say is the marketing is like, enter the conversation already going on in the prospect's head, or meet people where they're already at. So you gotta first understand them. It's like first seek understanding before seeking to be understood. There's a lot of marketing, a lot of life quotes there, but
sure.
It's what you're saying. You got to figure out where someone's at and help guide them. Because if you're too far ahead of them, which I think can happen a lot in this space, there's a lot of jargon, tech lingo, and all that stuff, and it's new for a lot of people. It's hard for people to like hear someone talk about crypto and then not get overwhelmed if they've never been a part of it. I know from my experience, it was like that too. And I think I'm a pretty technically savvy guy. So it's good that you do that and that you make that a priority in how you work with people. I want to go back, and because back again to 2017, back when we first got started, even a little more than 6 months ago, like you had a full-time job, you were working, and you didn't just make the switch overnight. You're very strategic with it, made sure you had enough stuff, wealth built up or passive income built up, which sounds really smart. But how would you, I guess, give some experiential, non-financial advice to someone who's in a similar situation, who's working a job, obviously sees that they don't want to be in that job forever, or they want to have more freedom, and they see crypto as an opportunity? What would you tell them to how to save, right? Or how to invest strategically and not get sucked into all the hype and all that kind of stuff?
Sure. Yeah. So I think every situation is different. Everybody's starting point is different. Everybody's capital that they're looking to invest is different. So I always say, the first thing, if all you can afford to do is, take $50 a week or something out of your paycheck and just allocate it towards crypto, I would say, that's a different situation than if you are making, if you have $100,000 to invest. So for someone who is entering the market, who has a small amount of capital that they're looking to invest in. And that's okay, because at the end of the day, you're still ahead of 90% of the world.
Yeah.
So even just taking that first step, it's just a different mentality that you have to have. So even if you can just afford 50 or $100 a week or a month or whatever it is, what you're doing is you're exchanging your terrible government fiat money for new, decentralized, immutable, deflationary currency.
Okay.
So your timeline might adjust, because you now have to think, instead of fighting an uphill battle where you can never really gain any ground in this old system, you're immediately, taking leaps and bounds ahead of probably everybody that you know around you. Because again, 9 out of 10 people, if you just see on the street, probably aren't invested in crypto yet. Yeah. So even if you're just investing a little bit, you're already miles ahead of the pack. Whereas for someone who has, I don't know, 50 or 100K or any kind of big number, even if it's just, more per week or per month, I would start to accumulate and look for projects that have an ROR in staking.
Okay.
And that's kind of the biggest thing. So there's a handful of, there's a handful. Staking? Sure. Okay. So we can take it a step back. There's 2 consensus algorithms in cryptocurrencies.
Okay.
Bitcoin is proof of work. So the way that the financial incentive for the Bitcoin structure and the proof of work structure is to become a miner. Miners are the ones who they verify the blockchain, they verify the transactions of the network, and they get paid out to do so. It does cost, there's an upfront cost to essentially buy into the network and become a part of it. Whereas there's a different second consensus algorithm called proof of stake. This is where you take stake in the network by simply buying a token or whatever the coin is, and you put that chunk of whatever it is, and you stake it into the network. And you lock it up in the network, and it's the same idea. It's the same consensus where you're validating transactions, you're validating, making sure everyone's following the rules. And by doing so, you get paid out in the newly minted inflation of the coin. Okay. So a great example of one of the biggest, coins that has one of the greatest RORs in the space is the Divi Project. Okay. And Divi Project has something.
You say ROR. What is it?
Yeah. So ROR is a rate of return, essentially. Okay. So it's you can look at it as, a stock that has, what's it called? It's it's not, so there's stocks, and then there's, help me out here. It's forget it.
I don't know. I always say ROI, like return on investment, rate of return, stocks, bonds.
Stocks, bonds. It's anyway.
Is that,
yeah, you get the idea. Where it pays you out. So there's the conventional method of you buy low, you wait, you sell high. That's one way of ROI. Whereas there's the second stage where you're actually the capital that you're staking into a network is working for you and actually helping the network run, so you get paid out and such.
So almost like it's creating cash flow, right?
Correct.
Almost, it's kind of like if
dividends, dividend stock. Yeah.
Dividends, or like even investing in a real estate property and renting it out.
Correct.
So I'd love to hear more about that, because that sounds fascinating.
Sure. Yeah. So you can look at proof of stake sort of as digital real estate. It's a great way to kind of visualize it, conceptualize it, where now you have, in a digital landscape, you have put your purchasing power into a network and you've locked it up. And as the network expands, you're growing, your worth in that network grows exponentially with it. Okay. So a great example, like I was saying earlier, is the Divi Project. Okay. And where they have a system of, it's called a master node, where you're able to both stake on the network, and then you can also, if you have a big enough amount of the Divi token, you can lock it up in what's called a master node. And they have a whole patented technology that is where it's just a one click, where you can deploy. All you have to do is buy enough of the token, keep it in their wallet, one click, and then now you have deployed a master node, which is sort of the brains of the blockchain. Okay. And you are an individual who is now verifying and keeping the network running. So with a project like the Divi Project, they have a fair amount of inflation currently. And so you're able to reap the rewards of that inflation. Over time, that inflation shrinks, and the Divi Project is actually the inflation model is very similar to the inflation of Bitcoin. It's just laggard by 8 or 10 years. So yeah, you kind of have to change the way that you look at money and change the way that what is your money doing for you? I saw a lot of people mess around with a lot of altcoins, and I did
Yep.
for a long time, but it's very difficult to time the market,
Yep.
B, not get emotional. So
Yep.
the approach now I take is just, I seek out projects that I can stake my purchasing power and my capital in, and really not even have to think about it. And I'm getting an ROR, rate of return, every day, every week, every month. As the network expands and as the inflation expands, I get to take advantage of that. So,
so for the Divi project, perhaps I can ask you a few details on that, because that's, I've heard about that, and you've mentioned that. I've heard other people mention it, and so when you get paid out, are you paid out in Divi tokens, or is it the same that you stake, so you can buy Divi tokens and you get paid in Divi tokens? Is that
correct? Yeah. So I think the ROR for the master nodes is about 20%.
okay?
So let's say I believe the lowest tier of master node is 100,000 Divi. So right today's prices, it's roughly $5,000.
Yep.
So if you can swap in 5,000 worth of Bitcoin into the Divi token, run it on a MacBook or on your phone. Now they have a mobile wallet, and start a master node, you're now going to earn 20,000, roughly 19 to 20,000 new Divi per year.
Okay.
So that's their annual ROR.
Yeah.
And obviously the more you stake, the greater that return gets. So I kind of saw that as an opportunity where, if I have all these altcoins that are just kind of sitting and I'm waiting for them to pump.
Yeah.
I might as well swap that into something that is a working coin and a working token, and be consistently paid out in that, with that kind of method.
Yeah.
So that's primarily one of the bigger ways that I've made passive income at this point. So
would you say that's because I think that's a great strategy for especially when the market's moving sideways, when it's all over the place, that's good too, because you get exposure on the payout with Divi, right? And then also any sort of price fluctuations for it. And you say it's a deflationary token, so the amount of supply that it has got a fixed supply, right?
No, well, so currently in the code, it's not like Bitcoin where there's a fixed, amount that will only ever be mined.
Okay.
But that's where governance comes into it. So for the next, I believe it's 8 or 9 years, there is a inflationary model that's written in the code that can't be changed.
Yep.
Where I believe it's every block, which I think every block is 60 seconds with Divi. There's another, I think currently it's either 1050 or 1150 new Divi tokens each block, similar to Bitcoin, where there's 6.25 new Bitcoin every 10 minutes. It's just a different inflationary model.
Yep.
So yeah, like I was saying, it's still very early on in projects like that, where you're able to reap the bigger rewards of the bigger inflation. But over time, that's the whole point of the deflationary model, is that the token price goes up as the token becomes more and more scarce.
Yeah.
So
okay, that's very cool. So it's a way you can invest in crypto without trying to pick the next coin, the next winner. And then it's also like you almost have a guaranteed rate of return, which is pretty valuable. And you mentioned it's about 20%. And a couple of times you've said, we've trusted banks and these third-party institutions to store our money from us, and that's not good. So can you perhaps compare that to, investing in something like the Divi project, or, cryptos in general, versus like a bank, and why it's better, and maybe put some numbers to it?
Sure. So yeah, for as long as I can remember, the banks have convinced us that if we give them our money, they will guarantee the safety of it, which isn't always the case.
Yeah.
And then will guarantee some sort of rate of return for doing so, whether it's a CD, but savings account. But over the years, due to inflation, that rate of return has just decreased into almost nothing. And you are still giving up custody of your money. Whereas now enter something like the Divi project, where their private custody is very important with them. And I personally don't ever feel comfortable ever holding my funds in a wallet or an exchange where I don't hold the private keys. Okay. So the private keys are what custody is. It can be boiled down to, essentially. It's a cryptographic set of keys that you have a public key, which is how, someone can send you a cryptocurrency.
Yep.
And then you have your private key, which is generated inside of the wallet and then is never broadcasted anywhere outside of that wallet. So the safest way to keep your keys are, I always write them down on a piece of paper, I label them, and I usually just keep them in my safe. So the private keys are what give access to a wallet if you've ever lost that wallet, or if you've ever have to switch over to a new device. But in the grand scheme of things, that's what separates your wallet from every other wallet on the network, is your hashed cryptographic key that is unique to you and you alone and your wallet alone. So even in a system like the Divi Project, where they actually, the master nodes are hosted on a centralized server that the Divi team runs, you still have private access to your individual funds because of your private keys. So and there's never a situation where they hold your keys and they hold custody of your money. So that's the biggest difference. And even in
so you can always go to a blockchain and say, you know, even if you're, say your laptop that you have your Divi staked on gets destroyed, right? You could just get another laptop, download the Divi node, and then put your private keys in, and there's all your Divi because it's on the blockchain. Is that what you're saying?
Correct. That's essentially the model of all cryptocurrency wallets, is a private wallets. So, and this is the importance of that, is that if you, any wallet, it could be the Exodus wallet, it could be the Divi wallet, the private, if you are not prompted to create a private key, or the wallet will create it, but if you're not prompted to write those keys down, that's how you know you don't have a private wallet and you have a third party hosted wallet. So I always avoid those. And yeah, that it just changes the way that we can deal with money, because now our money can work for us in a decentralized fashion where we just cut out the third parties. And there are companies who do offer, I think it's a yield on Bitcoin and Ethereum and Litecoin. I think it's BlockFi.
BlockFi, so
where you actually, you send them your cryptocurrency. I've never done, I think it's through a smart contract, or maybe it's just through some sort of contract.
I think you send it to their account. I've put a couple $100 in, just to experiment with it, because you know it's a couple $100, so it's not but and you send it to their account. I think they hold custody of it. I know, you know, if you really value holding your own private keys, those type of companies are no go, because they have access to your crypto. And what happens if they just
well, it's kind of exactly. It's the whole Mount Gox thing, which was sort of the first exchange that ever kind of existed in the space, and they ended up getting hacked. And then there was this big lawsuit that took 4 or 5 years to settle. So people's money, if you kept it in the exchange at the time, was locked up for that entire period and didn't have access to it. So there's always, you know, it's always kind of a risk reward. I think places like BlockFi, they offer 6, 7, 8% on non-yielding coins such as Bitcoin, Litecoin, Ethereum, even though Ethereum will be moving over to proof of stake, you know, eventually. But it's just risk reward. Are you looking to, you know, gain an ROR out of just holding crypto, or is private custody more important to you? So that's something that the individual just really needs to ultimately make that decision for themselves.
And that's where someone like you can come in videos like this, where you help educate them on why it's important, what it is. And obviously people have different, you know, preferences and risk tolerances. And some people, they're totally fine with, you know, someone holding on to their crypto. And other people are like, I don't want that because I had a bad experience. And then I know for myself, like, you know, you put your money in a saving, you think saving your money is okay. We're taught, and it was kind of cultural here in America, that you're taught saving money is a good thing. And recently, well, more recently, it's become very evident that saving money isn't necessarily a good thing. Investing money is the good thing, right? Because if you just save your money, like say you put your money just in a savings account in a bank, I mean, what percentage do you get out of that account? Like 1%.
When you really start to break down who incentivized the savings, it was usually the banks, because by keeping your money locked up in a bank, you know, you're not really reaping any of that reward, but the banks sure are. And there comes in fractional reserve lending, and every $1 that they hold, they get to, you know, lend out 9 times legally. So the incentivization of savings money was always, I think, came from the banks. And but in reality, if your money isn't working for you, it's actually, losing, money to inflation every year. And they always kind of spouted off this 2 to 3% inflation, when in reality, it's more like 15 to 20% now. So if your money is just sitting there, and this is really big, a shift that a lot of people don't understand, is that if you're just saving your money, you're losing money. So it has to be working for you. So then you have to go about, well, what's the best way for that money to work for me? And for me, holding private custody of something like in a Divi token, that's a proof of stake, where it's working for you, but I still retain private custody of it. I mean, that's just the best of both worlds. And more and more people are going to wake up to this and be forced into doing this stuff, because they're going to watch their purchasing power just disappear over the next couple of years. So it's important to kind of get out in front of this stuff and take action.
Well, that was something that really woke me up, was hearing that, the under the radar 15 to 20% figure of inflation. Yeah. And just having it broken down and explained is like, look, if you have $100,000 sitting in your bank account, $1,000, and you don't do anything with it if you had it at the beginning of last year and now it's this year, if you didn't do anything with it, your purchasing power is now 15 to 25% less. And if you don't believe me, and it's like, okay, how does that work? Well, it's like, well, go look at the price of assets, right? Mm-hmm. Go look at the real estate prices in your area. In Denver, like we both are here, and the prices of real estate, it's wild. Even the price of renting an apartment's up, and the food costs, all of that stuff is going up as well. And then you see things like the price of commodities like lumber and all that. If that's going up in price, then the things that those things are used to buy or used to build will go up in price as well. So everything's more expensive.
Yep. Yeah. It's a crazy, tricky time period right now. And, I think a lot of people are looking for, the people who are noticing and paying attention to this stuff are looking for a place to park their money and not have to think about it. And, this is for people who are just new getting into crypto. I usually tell them that, 50% of whatever you want to allocate towards crypto, just stick into Bitcoin. Yeah. I think, Bitcoin has the first mover advantage. It has the biggest network growth at this point. And I think for generations to come, Bitcoin is going to be the Bitcoin standard. So you might as well accumulate as much of that as you can and, reap that reward. But then that other 50% that you want to allocate is where you can just try to find, proof of stake coins, or gamble with 5 or 10% and try to, on altcoins and try to make more Satoshis. But yeah, at the end of the day, it's crypto is just the clear winner in my mind, versus housing, the stock market, of course, bonds, all the rest of any fiat instrument at this point is subject to the massive amount of money printing right now. Yeah. And the only reason that any of these fiat assets are going up is because they're printing so much money, and they're diverting all of that inflation into certain sectors like the housing market. But now it's starting to seep out into just about everything. Yeah. And when you, again, factor in, if you're just living paycheck to paycheck, just ask yourself, how many raises have you got in the last couple of years? And then you start to compare that to the price of goods. Now it's a runaway train that it can't be stopped at this point.
From my understanding, it's essentially stealing from the people that don't own assets.
Correct.
Which is, that's everything that, most people want to fight against, with making the rich richer and the poor poorer. Like that's not a good situation in any place. And that's kind of along the lines of why I started with, this is about freedom, because you can't have freedom if the majority of the population is essentially, it's like a new form of slavery, wage slaves.
Yep. Absolutely. Yeah. Well, that was how they designed it, and I love the history of money, how, it was 1913, the creation of the Federal Reserve and Creature from Jekyll Island, they designed this system to do exactly what it's doing, to, not, 90% of the population just doesn't think about this stuff. They just, want to live their lives. They go to work and have fun, drink a beer, the system was designed exactly for those people to just sort of, lose their purchasing power little by little. How do you boil a frog? Just over the years, it's just little by little, without really noticing, your life just getting more and more and more expensive. And again, the people who understand the system are able to benefit from it. But this is why they don't teach us this stuff in school. They don't teach us this, it's like the people who take advantage of stuff have to seek this stuff out and have to be action and goal oriented. So it's not for everybody, but eventually the entire world is going to be forced into this space because there's never been a fiat currency that's ever survived. Every single one of them in history has always gone to zero, and the US dollar is not exempt to that.
Yeah.
So.
Well, so if someone wants to seek out the information, how could they seek you out? How could they connect with you to learn more? Because you obviously know a lot and can be very helpful.
Sure. Yeah. So I do one-on-one consultation appointments through Calendly. So it's calendly.com/crypto homie. Okay. And you can book an appointment, 15 minutes, free 15 minutes. We can just kind of get to know each other, kind of feel out what are your goals. And then I have a 30-minute and an hour-long session where I can show you how to buy. I can show you how to swap if that's what you're looking to get into an altcoin. And then ultimately I can show you how to set up a private wallet and then take custody of your crypto, which, like I always say, is the most important thing to me.
Yeah. And then you could probably help someone if they wanted to learn more about Divi, help them set up a node and understand the investment intent behind something like that, because I think it's valuable to know that that's out there.
Yeah, absolutely. Yeah. I think that, again, like I say, first step, if you're new to this space, is just buy a little bit of Bitcoin.
Yep.
Because at the end of the day, that's, 99% of what, the swapping is. I guess there's other, pairs and stuff, but it's Bitcoin. You can swap Bitcoin for anything. So I always tell people that's just where you want to start. Get into the market, get some Bitcoin, take it off the exchange, get it to a private wallet, and then you can kind of go from there into altcoin investing. And then ultimately, projects like the Divi Project, where you can start getting an ROR and a yield from the tokens that you're investing in. So
awesome. And so I just want to do a quick transition to what is going on currently, because you mentioned you got exposed to crypto with the last bull market, right? And then you stayed with it, right? Mm-hmm. You bought in during the last bull market. And then you stayed with it during the bear market, and the bear market lasted from the end of 2018 until, the fall of 2020.
Correct. Right.
It was a long time.
Yeah.
So what do you think is going on now? Like, is this going to follow a similar trajectory, or, what do you think happened?
I think all the on-chain analytics and all the people that I follow that break all that stuff down, we're right on track to what we did in 2013 and 2017. It doesn't look the same if you just quick glance at a chart, but if you really study the on-chain analytics, like the Plan B on Twitter and his stock to flow model, I mean, we're right where we're supposed to be. Mm-hmm. So this big dip that, this big correction that we've been having, people are, is it the bear market now? And if you really study the cycles, if that were the case, this would have been the shortest bull market that, okay. If you said the bull market started when we bottomed out at $3,000, okay, maybe not. Yeah. But for me, the new bull market doesn't start until you break all-time highs, which was, again, that was only 6 or 8 months ago. Yeah, start of the years. Yeah, December. So it would have been one of the shortest bull markets that there's ever been. So I still think that we're in a period of reaccumulation, which has happened every bull market. There's a big run up. People get really excited. Retail investors come in, they get hyped off of, Elon Musk and all these other people and all these crazy celebrities coming out and promoting it. And they, throw some money at it and they're thinking they're going to get rich overnight. It happens every single time. And then, oh, well, what did Elon just do? It kind of got tapped on the shoulder. Hey, we, big boys, we need to get some more of this stuff. So can you tank it for us? Sure. All right. So ultimately, I think that's where we're at. I think it's a stage of reaccumulation. And I think there's a ton of money getting into the market right now. You don't see it because a lot of it's over the counter purchases right now. But even just, I saw the other day, the net outflow of Bitcoin from exchanges is spiking back up because, again, everyone's buying and then removing their coins from. So that's a precursor to, another price ramp. So I think maybe another couple of weeks, another month or two, we might just be kind of stagnant. I don't know, maybe back down into the 20s, the high 20s. But I just think there's so much money that's coming into this market that's scared of inflation, realizing that we're in this transition, that I don't think that this bull market isn't going to be like last bull markets where it was mainly retail driven. Now we're seeing hundreds of millions, billions of dollars coming in of institutional money. Yeah. And, they don't have short-term plans. They're buying this stuff. They're accumulating this stuff for, decades. So when you kind of understand that, you can kind of skip past all the FUD that you see day to day. So I think they're going to do everything they can to scare as many of the retail investors out so that they can buy up as much as they can. And then I think we're going to be off to the races again. And I think easily 6 figures this year is still on the table. So,
yeah. Well, I know. I mean, I agree with you. And I want to hit on one other point in just a second, but I heard Kevin O'Leary speak at the Bitcoin conference. He hosted a panel, and he was, he was leading the panel and had some experts on the panel, and he was asking questions. He basically said, I know for a fact there's $1 trillion from institutional investors that are just waiting to come into Bitcoin, and they just need to get around the narrative that Bitcoin is too energy intensive, right? Is harmful for the environment, which we know. And I bring this up because it's important. It's all about the education. If you study Bitcoin, that it actually can be very beneficial when used and directed appropriately for the environment and energy consumption. But just that $1 trillion, Bitcoin was at $1 trillion when it was at 50K. So another $1 trillion entering into that market, just from people that are concerned about the environmental issue. There's companies out there that aren't, right?
Right.
Any sort of oil and gas company, right?
Right.
They're not concerned about that message, or their shareholders don't care about that as much as, someone else. But that would double the price just right there, if the money entered the market.
Right. Well, and that whole narrative is just kind of stupid, because when you really understand Bitcoin, Michael Saylor talks about this a lot, it's one of the most efficient forms of money that's ever been created. And the way he always talks about from an engineering standpoint, but thermodynamically, I think is what he says, it's a closed loop. So once you enter into the network and you put your purchase, you buy a little bit of Bitcoin, you put your purchasing power inside the network, that purchasing power will never bleed or leak out of that system. It will be contained in that system forever. So once you kind of understand that, well, okay, again, with how inefficient is the dollar right now? How many trees do we have to cut down? How many, all this, and then with gold too, with final settlement of gold. I mean, at the end of the day, either your gold is in a third party, or, okay, if you want to transfer $1 billion worth of gold across an ocean, I mean, that's going to cost you $200,000 in gas or whatever it is. So the idea that you can store your purchasing power inside of a decentralized network that you can access just with an internet connection is the most efficient form of money I think that's ever existed. So this whole, environmental narrative, it'll fall by the wayside. And I think it's just this month's FUD, but eventually people will understand that, Bitcoin, and then even more so proof of stake coins, are just by and large more efficient than any form of money that's ever existed. So but like you said, it's just an education thing. People need to learn this stuff on their own and let it all process and sink in, which takes time. So
and it takes that education. It takes you actually going one step ahead. I always say that I wish I would have done that in 2017 and in 2015 and 2013 when I heard about this before. But like many people, you're focused on other things, and you just get the headlines, and the headlines can be very deceiving if that's all you get. And even reading articles, you mentioned it before. You said they manipulate. Like there's this bigger power that wants to manipulate the public's perception, which is kind of conspiratorial, and it seems to be playing out as I always think, like, as I get more informed on a topic and then I see a news article come out, I'm like, that's just a lie. And you start seeing that everywhere. So is there truth to that? Like, is there a they? Like, who are these they?
I think they is sort of a relative term, but I think they is just a big collective of individuals that are all trying to manipulate the market. We're individuals. We can manipulate the market. We, by purchasing Bitcoin, we are manipulating the market to go up. So it's really just a battle of who the biggest sort of individuals in the space and who has the biggest amount of capital is. So I think there's a handful of wealthy individuals who understand the transition that we're going through, moving away from fiat currencies, and they are trying to accumulate as much deflationary currency like Bitcoin as they can. Now, I think these wealthy individuals, I don't know. We can go too far down the rabbit hole of conspiracies, but it's rich people hang out, and rich people have influence. And, you know, a whale with a couple $1 billion can have friends in the news, and they can say, hey, you know, can you do me a favor and publish some stupid article about Bitcoin that doesn't really make sense, but again, it just create a headline, and then, you know, most people who see it are just going to go off of the headline. So I say that I think it's just, you know, kind of the wealthy elite, and I do think they understand that this is the new money, and so they're trying to accumulate as much as they can, and they're going to use their influence and use their power in whatever ways they can, mostly the media, to convince all the little people like us to not buy any, and to, you know, so they can have it all. So yeah, I don't know. There's lots of conspiracies out there, and you know, a lot of them are true. So, you know, but well, just how far you want to go down that rabbit hole.
I mean, it makes sense. It makes sense that that's a thing, and that's a possibility, especially in the smaller market. You know, you look at coins, even once you go out of the top 10, you know, some of those coins aren't even valued at over $1 billion, right? And so some big player can post, you know, as we saw with Elon Musk, whether or not it was all attributed to his tweets, but it does have an impact. And if you can do that, and you're not going to get in trouble to do that, and you can make money doing it, it makes sense that someone would probably be doing it.
Yeah, well, even just the irony that he even came out and stated that Doge was created as a joke, and when you really understand the inflation model of Doge, it is a joke. It's just, you know, a couple of years from now, there's going to be so many Doge tokens that it's going to be very hard, unless the miners come together and change the inflation model and change the governance. It's going to be a worthless token, but for right now, it's sort of the meme coin. It's you know, and you can kind of see how powerful these elite, you know, wealthy people in the world are when it comes to influence. If one guy, you know, big billionaire can say, oh, this is the token I want to use, well, all of a sudden that token becomes, you know, it was like top 4 on CoinMarketCap.
Yeah.
So it's just crazy. But at the end of the day, you know, this is a game, is a long-term game, and that's where the understanding of tokenomics and inflationary models in coins that are set in stone, that's where those are the long-term winners. So Bitcoin, Litecoin, Ethereum, and a handful of other, you know, I think there's going to be hundreds of use cases and tokens that hold value and derive value and create value in the new economy. So, you know, it's really just education and going against the grain, going against the herd, and just kind of thinking for yourself with this stuff.
Well, we could do a whole conversation on tokenomics and all that, but we'll have to save that for another time because we're out of time today. John, I really appreciate it. Now, where you mentioned some of your stuff before, but where can people find you? How can they get in touch with you? How can they follow you on Instagram or YouTube, or what are you doing there?
Yeah, so I'm on Instagram and Twitter the @ is @CryptoHomieJohn. Yeah, you can follow me there. I kind of post daily stuff and news updates and everything. And then, the links to my, to book an appointment with me will be on my social media accounts too. So yeah, that's the best way to get in touch with me.
Awesome. Well, thanks so much. Definitely enjoyed having you on, and look forward to chatting with you again.